folks, Eric Wilkinson with ProTraderStrategies.com. Yeah, you might recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. And I'm going to do the same thing in these daily market commentaries. But I'm going to talk about my option strategies that I'm implementing into my portfolio based on the assumptions I come up with through that technical analysis. And for you folks, I've streamlined the process in order to find the optimal option strategy for any given assumption. We don't just pick option strategies out of the hat here at Pro Trader Strategies. What we do is we look at what's going on around this underlying and find the optimal option strategy. So we've created a process for you all to follow in order to find those for your given assumption. All right, so let's get on with the economic data. Across the pond, we got Great Britain Consumer Price Index, a little hotter than expected at 0.7%, expected to be 0.6. Stripping out food and energy, that number came in a little bit higher as well at 1.4, expected to be 1.3. We got Great Britain PPI, Producer Price Index, input coming in at 0.7%, expected to be 0.5%. And the output came in at 0.4%, expected to be 0.2%. So they are passing along higher prices to the consumer. Inputs are higher, and that is what we are seeing in the output, which is to the consumer. So it looks like they're passing on the higher prices to the consumer there in at least Great Britain. Here in the United States, we got core retail sales coming in at 5.9%, knocking it out of the park from the 1.1% we were expecting. They did revise last month's number down, albeit only 0.4%, but that number really knocking it out of the park. And surprisingly, that the number isn't really pushing these equities higher. So remember, core retail sales strips out the automobiles. I think I said food and energy on that. Retail sales with the cars, automobiles, transportation back in it, came in at 5.3%, expected to be 1.1%. So that shows that we're seeing automobiles move as well as other retail sectors. So that is a really good thing. Core PPI, Producer Price Index here in the United States, 1.2%. PPI, Producer Price Index, which core PPI strips out the food and energy. The PPI coming in at 1.3%, expected to be 0.4%, so that's good to see there. And then we also had capacity utilization coming in at 75.6%, expected to be 74.9%, and a revision to last month's number up to 74.9 from 74.5, so 0.4 increase there, but nice numbers today. Business inventories did rise slightly to 0.6%, expected to be 0.5%, but it seems like with the retail sales number that we're seeing there, that they need to build some inventories if they're moving that much product. National Association of Home Builders Index coming in at 84, higher than the previous 83. And we have the FOMC meeting minutes later on today that could make some markets move there. And earlier this morning, we had Barkin speaking, who is an FOMC member. Equities. Let's get on to crude oil. Is coming off the highs of the day, trading at 61.26. I do not, folks, see this market slowing down any. We've seen all of this cold weather in Texas specifically. We've also seen Biden really clamp down on, creating fossil fuels or pumping fossil fuels out of the ground here in the United States. A lot of those things have been driving crude oil prices higher. Well, right now, production for crude oil in the United States is absolutely cratering from all of this cold weather. And we're even seeing electricity issues in Texas because of this high demand for heating, electricity, all of those things for this cold weather, this cold vortex, polar vortex we're seeing. So all of those things are helping drive crude oil higher here. Production woes coming off dramatically here in the United States, colder weather driving demand, and that is pushing, and likely the manufacturing sector is going to be starting to drive some demand here as well if we continue to see these retail sales numbers start to spike like we saw today. All right, so crude oil is off the highs, but still, I don't know if we're going to see any slowdown there. It might be time to fill up the tank and call uncle on this. Bitcoin trading up to 52,000. Everybody talking about Bitcoin today, but I would hope that it would have given gold a little bit of love here with another round of stimulus just around the corner. That's causing a little bit of weakness in some of the markets, as we're seeing that could really influence inflation going forward and bonds moving higher because of that possibility of inflation. So everything's a little bit out of whack right now. I would have expected to see gold start making a move higher. Now we do have bonds higher on the day, close to a point after yesterday's big sell-off in the market. I think that this market is just well overdone, but those inflationary fears, a lot of people are calling for higher interest rates to follow those inflationary numbers. VIX is a little bit higher because we're seeing weakness across the board in the equities, and it feels a little bit toppy. Just that the market, it just feels like it's really struggling to go higher. Now, yesterday and on Monday, we got this continuation pattern, which we've kind of been seeing now with these candles at the top of this move. Now, a settlement, in negative territory, maybe down 100 points would really look like this is finally made a top and starting to look to make some corrections here in the markets. That's on the Dow Jones. We can see with the NASDAQ down 203 points, leading the charge to the downside below the 9-day simple moving average. All of these things are leading me to believe that the markets are ready, the equity markets are ready to have a little bit of a breather or a correction. Now, remember, last week we saw this entire market really consolidate into a short, tight trading range. And I've talked about this time and time again. It feels like it's like a rubber band being wound up around an old balsa wood propeller airplane, right? And the more you wind that thing up, the faster it goes when you release it. Well, the same thing is in the markets. When you get these tight rubber band wind-ups, it feels like the energy is really starting to build up, and it's going to snap to the upside or the downside relatively soon. To me, the risk right now feels like the downside is the path of least resistance anyway. And with this setup here in the NASDAQ, it looks like it is confirmed. Now, Dow Jones, not quite so much at this point in time, but right now, looking at this chart in the NASDAQ, looks to me like we are ready to at least come down, and if a settlement below the 9-day simple moving average or near these lows that we are right now, it will look like we are going down to test the 50-day simple moving average in the NASDAQ. E-mini S&P is very similar to the NASDAQ. Topping pattern, chart confirmation, settlement below 9-day simple moving average continues that, or actually strengthens that thesis for a bit of a correction rollover, at least down to 3,800, let's call it. So another 150 points lower, 160 points lower than we currently are in the E-mini S&Ps. Now, looking at the E-mini S&Ps on a daily chart, this is that winding up of the rubber band that I was talking about. Yeah, we did get a little bit of a snap to the upside, but that's just what's created that topping pattern that we've been talking about yesterday, even more so today. That confirmation really looks like the market's ready to roll to the downside. So putting on some protection right now, or even yesterday, like I talked about, would be the time to be doing that, because we got this really low implied volatility in the market. So that would be the time to be buying puts for protection, because the movement in your direction obviously will help. Volatility expanding and you don't get that directional move will help you as well. So we're trying to set these strategies up in a way that you guys will benefit, because the probabilities get turned in your favor when you're playing it like this, okay? When you can play something where you're buying really cheap premiums and those premiums expand, despite the fact that you might be directionally wrong, you can still make money, or at least not lose money there. So that's what I'm looking at. You guys know I have on some long puts in my trading account. I have not gotten out of those SPY long puts. I'm also long TLT as well, because I believe that we are needing some protection in my portfolio, or I'm needing protection in my portfolio because of this market rollover there. Then Gumble came out with earnings. You can see they missed on the headline number there. On their earnings number, they were expected to be a negative 22 cents, came in at negative 57. We are slightly negative on the day by about 52 cents, but something to say with the earnings call was really very positive. Forward outlook, they raised their guidance from, I think, 13 million to 18 million in sales next year. I can't see it in my note. Yeah, 13 million up to 18 million. So they raised that for their sales. Also, they did miss on this headline earnings number, but their sales did beat the street by about 100,000. Not a huge beat on that, but they did beat nonetheless on the sales, overall sales for the company. The earnings per share missed on that. And I tried to dig in the numbers a little bit, but I didn't see why. I'm guessing it has to do with acquisitions is why their earnings per share went down a little bit. Because the sales beat, there has to be some kind of write down or something like that going on for that to miss on that headline number. But otherwise, the sales call was very positive. We can see overnight during that sales call, the market really started making a move to the upside, talking about raising forward guidance and everything else. Today's the only real part where people are probably looking at that headline miss, not looking at the forward guidance and the raise of their sales forecast going forward. And then VMNT, it's just kind of coming off. It found some support right here at this level. This is where we found some resistance before, and it came down and found this as support today, right around the $1.20 area. We're just slightly above that. I've just been keeping an eye on this. Oh, I know what I wanted to talk about with the Gumble trade. Well, with that forward guidance being so bullish and market really selling off here, I looked for an opportunity with high volatility in here to do some cash secured puts on Gumble. Now, I've already bought this stock and own it from $4.88. That's where I originally got into this. But decided to take advantage of some high implied volatility. The markets are really wide in here, so it's not like a normal stock that I would trade options around. But with that being said, I already own this stock, decided to try and throw some cash secured puts in there at around the $7.50 level. So I am looking at the March, selling the 7.5 puts for 30 cents. Now, I was working a 35 cent offer. That was my offer for a while. Somebody put in a 30 offer. Despite the fact that the market started selling off, somebody bettered that market with the market coming down. And that's probably likely due to the fact that we're seeing that volatility come out of this market, which is extremely high, even for something like Gumble. You can see the market just really spiked higher on implied volatility out of nowhere on this big rally here. Now you can see the market starting to have that volatility come out a little bit. I'm trying to take advantage of that, but at the same time, trying to sell some cash secured puts down here at this nice little level of consolidation. So if I can get both of those things, where if I could put the stock at around $7, I'm more than happy, especially with their forward guidance being as good as it was. That leads me to believe it's going to want to migrate back to 20. So if I can get a collection of credit here, an extra, like a little dividend or lowering cost basis, however you want to think about that, that's what I'm doing with Gumble, with the dollar cost averaging, selling those cash secured March 7.5 puts in there, trying to get in for 30 cents. I think I'm on the offer there, last I checked. All right, so that's all I've really got going on in the markets right now. So I'm going to try and play that out for a little bit longer. Didn't do any earnings. Was a little bit crazy yesterday. Had a friend come in from Alaska and ended up running around with him for a little bit yesterday. So that's it. All right, check out our disclaimer. We're an educational company, folks. We're not trying to solicit you guys to do anything I'm doing. What I'm trying to do is use my examples as learning examples for you folks. So we're not cherry picking anything here. I'm talking about the winners, the losers, and the ones that maybe even scratch. So I'm not trying to cherry pick anything here. What we're looking at it is as if this was any given day. There goes my gumbo. I'm filled at 30 cents in the March 7.5 puts. So I just got those as we speak. All right, so there we go. Dollar cost averaging, get a dividend, whatever you want, however you want to look at it. Staying mechanical with my portfolio in gumbo. All right, that's it. That's all I got for you folks. If you can't take that, take it easy.